Welcome to the Bottom Line Live. I'm going to share this real quick in the groups, and I'm going to start talking to you guys about business deductions. These are questions that I get asked basically almost every day about what is deductible and what isn't. So I am going to explain and tell you guys. I'm going onto my computer, sorry. And I'm going to tell you guys everything that you might want to know, and even things you probably don't want to know. So here we go. I'm going to share this, share to a group, and I've got my computer open and my phone, so that way when you guys are asking questions, I don't have to scroll on my phone to answer. Bottom Line Live. All right, here we go. Here we go. And Jerry and I were actually just talking about this recently, because I know I get asked all the time, well, yeah, Jerry deducted his car for business. And I'm like, yes, this is true. We're going to even talk about that a little bit. So one of the things that Jerry mentioned that we were going to go over was, what did he call it? The 4 quadrants. What did he call it? I'm going to read this again. The 4 points for what business deductions are. Hi, Nano. Thanks for joining. You always have the best questions, Nano. And I feel like you also know what people are asking you, so that really helps as well. Okay. So 4 points for just in the very beginning of whether something is deductible or not. Here's what we want to start with. Hi, Sean. Thanks for watching. If you have any questions, let us know. Okay. So here's the 4 points. So the first one is intention. Is your intention to purchase this thing for a business purpose? Obviously, if you're buying a business computer, it's for a business purpose. If you own a contracting company and you're buying a truck for your, construction, it's for business purpose. If you, there's lots of things that you're buying advertising for your business, it's for a business purpose, right? So that's the first thing. The first point, it has to be at least, let's say you have a home office, so your apartment or your house, obviously you live in it, but you're using one room or one space for business only. Or are you buying a car that's going to be mostly used for business, like at least 50%, right? So this is intention. Hi, Sydney. Thanks for watching. Okay, so what's the next point? Use. Are you using it for business? Or are you using it for personal? I've gotten asked a lot of questions like, I went to the movies with a buddy. Hi, Lexi. I went to the movies with a buddy. And I want to sell him something. So is that a business deduction? Okay, first of all, you're at the movies. You're probably not talking business while you're at the movies. Hi, Andrew. Love that you guys are all logging on. I know this is a hot topic. I'm sure lots of people are going to watch later too. Okay, so what are you using it for? And different people have different industries, different people have different types of things that they do, where some things are actually business use. For instance, actors, they often will say that Netflix or Hulu is a business expense. And for them, probably it is, because they're using it for research for roles. So fine, it's a business expense. But that's its purpose, and that's what they're using it for. They're not just watching TV when they get home like the rest of us, right? So that's how we're going to go. Okay, the next point. Validation. Hi, Wes. Thanks for watching. Okay, so validation, meaning it's validated by the tax code. Okay, so the tax code is very long. I have not read the entire thing. I know a lot of it. Hi, Devana. Love that you guys are all here. I have not read the entire tax code. Hopefully, your CPA has. I know a lot of it based on things that I've done. So there's specific things the tax code says is not tax deductible almost no matter what. For instance, if you buy a suit or a nice dress for a business event, the IRS is never going to say that that's tax deductible. The reason is that they say that it can also be used for other items later, or other, events later that are personal. So they're never going to let you deduct that. But if you're a construction worker and you buy, or a contractor and you buy a hard hat, that's something that's deductible. I know there was a court case where a stripper won because she bought a feather boa, and she said, yeah, guys, come on, I'm never going to wear this in real life. So she won that case, and that was tax deductible. So, you can always argue with the IRS if you like. But in general, there's things that are tax deductible and aren't. And the fourth thing is going to be documentation. So you can buy things, you can have all the other 3 points in, you can have intention, use, and validation, but if you don't have documentation, you might still be SOL because you have to have the receipt. Let's say you had a business meal. You took a client out to dinner to talk to them about their contract. Okay, so you went to a fancy restaurant, you deducted it. The IRS is going to want to see a receipt. They're going to want to know which client is with. Let's say you took a prospect out to dinner. I know not all of us are going out to dinner yet these days, but again, we shall be soon. So the IRS needs proper documentation. You have to keep a receipt of anything you're deducting. I don't think that you need to keep all your grocery receipts, but because they're not business expenses, but anything that you're deducting, even on your personal side, if you're deducting donations, if you're deducting medical expenses, you need all the receipts, right? So mostly we're going to talk here about business deductions, but I'll also mention some personal deductions. I know this is a hot topic because I get asked all the time. Now, there's certain ways to do things in a way that doesn't look suspicious to the IRS so that you're not going to get audited. For instance, we talked about this a few weeks ago. If you have a company and you're making a lot of money, you should be taxed as an S corporation at that point. Why? Because if you are a sole proprietor or you're self-employed and you're making hundreds of thousands of dollars, you are now a big fish in a small pond. The IRS it's gonna be very noticeable. Other than the fact that you're wasting money on taxes, do digital receipts work such as Mint? If it's an actual receipt, not just like a bank statement, it works. I don't know what type of receipts Mint gives you, but it has to be, it could be like a receipt that was emailed to you. It doesn't have to be one that, came out of a receipt machine, but it does have to be an actual receipt, not just bank statements or credit card statements. And again, sometimes you can probably get away with just a bank statement, but for instance, if you go to Home Depot, the IRS is gonna, or let's say you buy something on Amazon and you said it's office supplies, how do they know what you bought on Amazon? So that's why you have to have the actual receipts, not just a bank statement that says Amazon. Okay, what was I talking about right before that? So you have to have those 4 things: intention, use, validation, documentation. And I was saying that if you're a company that's not, incorporated yet and you're making a lot of money, incorporate yourself, because then you are a small fish in a big pond. So incorporate yourself. That makes you less suspicious. Just on top of it, once you're an S Corp, obviously you have to have payroll. I'm going to do another webinar just on the subject of payroll. So don't worry, that's coming up. Okay, so now here's something to think about. You're doing all of those things. You're incorporated, all of that. You're likely to not get audited. But if you do, realize that it's a lot of work. You have to put everything together. You have to, make these packets for the IRS and the auditor. It's hours and hours and hours of work. The more organized you are now, the easier that will be. Of course, I'm not trying to put everyone in fear that you might get audited. Honestly, none of my clients have ever been audited while I've been working with them. Some have been audited in the past, but it's something that the IRS just does something at random. So you do want to have everything together, because here's what's going to happen if the IRS finds something that they don't agree with that's not in the tax code and it gets disallowed. So now, not only do you owe the original taxes on it, you're also going to owe the late fees and the penalties and interest that go with that. So let's say, I don't actually recall how many years back the IRS can go, but I think it's like 7 years. So let's say the IRS audits you and 7 years ago you deducted something that you shouldn't have. And it was, I don't know, maybe it was an expensive piece of machinery and you deducted the whole thing in 1 year. And the IRS says, you know what? That was not for business purposes. That was for home movies. And they disallow it and you lose that argument. Now, not only do you owe the tax assessment on that thing, you also owe the late fees and penalties, which can add up to thousands, tens of thousands, hundreds of thousands of dollars, depending on what you're doing, right? Or how much money you made. So let's keep in mind that we want to do things right the first place. Like, obviously, you can deduct anything you want on your taxes, but that doesn't mean that it's legal. Now, if you purchase something with the intention, yeah, exactly, Lexi, yikes. If you purchase something with the intention of using it for a business deduction, or not, not for the business deduction, but using it for a business purpose, and you use it for a business purpose, again, you document it and it's validated by the IRS, all that, you're all good. This is not for anyone to live in fear. If you take your office out to dinner or something like that, and you're literally taking your office out to dinner and you invite their spouses, there's rules exactly about how that can be done. But let's say that's a legitimate business expense. You went out to dinner, you write exactly what it was for on the receipt, you keep the receipt, and you're all good. There's no reason to live in fear or anything like that. Like, we know that, we don't want the IRS to get all our money, so we want to deduct as much as possible, but we want to do things the right way so that things are legitimately deductible. Like, I know a lot of you have brought up to me, Jerry bought a car, he deducted it. Yeah, he bought it for business purposes. He drives it for business purposes, and he bought a certain weight of vehicle that is deductible all in 1 year. And whereas normally a vehicle, you maybe would have to, split it up over many years. And he used his sacred account. So he got like lots of tax deductions for it. On the personal side, if you make donations to charitable contributions, those are deductible up to, I think, 60% of your income. If you spend more than a certain percentage of your income on medical expenses, that's deductible. So you just keep records of all that, which you can do on mint.com. You can just keep the receipts, whatever you want, and you've got a bunch of tax deductions. On the business side, let's make a list of common business deductions. And I'm not going to say it's common business deductions that people miss, because people don't always miss these, but the better documentation you have, like sometimes people, will get to the end of the year and now they have to go through all their bank accounts and make a list and try to figure out what was deductible or not, because they don't have bookkeeping. So you want to have good bookkeeping, but so you don't miss any deductions, right? But here are some of the common deductions that you should look for as a business, and some of the common deductions that you're going to see on your profit and loss, especially if you're like self-employed. But anyways, regardless, these are deductions. So you've got advertising, marketing, right? We're all paying for Facebook ads or our Gmail or all these different things. Even if you are sole proprietor, you're self-employed, and you're not really paying for a lot of advertising, everybody does some kind of marketing. There are things that you are doing that are for marketing, and you might not remember. Maybe you put an ad in a paper. Maybe you sent out an email campaign. Whatever it is, we're always paying for things that are advertising and marketing. Sometimes we don't think that they are, or we don't remember that they are. Software. Here's something that you end up spending a lot of money on. I own a bookkeeping firm, so it's like, well, what software do we really need? We use QuickBooks, and Lexi and I were actually making a list of all the software that we use, and we use so much software, and it all adds up. Even sometimes it's only $15 a month. Each email is $12 an email per month. You've got a CRM, you've got your You've got your tracking software for your production. And even if you are self-employed, you still pay for a lot of these things. You pay for your email, you pay for your website. Maybe you printed out postcards. Maybe you hired someone to hand out postcards or do surveys for you, like lots of things. I know I'm talking about advertising and marketing still, but we all have software. You've got your email, you've got your leads tracking, you've got your MailChimp, or you've got, your website. All these different things are all different types of software, whatever. MailChimp, Calendly. Yeah, exactly. Lexi could probably make a list of all the different things, and they all add up. Okay, a lot of us these days are working from home, so you've got home office expenses. So the way home office expenses work is you take the percentage of the space that you're using for business. So let's say you have, I have a 2-bedroom, and one of the bedrooms is my office. I also sit in the living room sometimes and work, but I don't even count that. So I have about, I don't know, I'd have to count, but 25% of this new apartment is my office. So that means 25% of my rent, 25% of my utilities, 25% of any home repair, 25% of security, even could be 25% of your renter's insurance or homeowner's insurance. So all of those things are deductions that people do miss often. Now, if you don't have a home office and you work at an actual office, then obviously that entire rent, those entire utilities, everything. Okay, your phone bill. If you don't have a landline that most people don't have these days, your phone bill, if you use it mostly for business, it's at least partially business deductible. Your internet, if you work from home, it's at least partially a business deduction. Those are important things. Okay, so now office supplies. A lot of people were doing things online these days, but we still have office supplies. I still buy paper, I still buy pens, I still buy calculators when mine die, I buy printers, they cost $50. The ink costs $150. So, we're still buying office supplies. I have to have a printer scanner because people email me things that sometimes I have to sign manually and then scan them back, right? So those are all deductions. Okay, what are other deductions? I feel like I could maybe make a list, but it just depends on your industry. There's different things, a real estate agent could probably have different deductions than an actor and a doctor. And I've got all different types of clients. So everybody's, P&L looks slightly different of what they're actually spending money on. Insurance, not your health insurance unless your company is paying for it. Hi, Charles. And not your life insurance, but business insurance. Yeah, that's a good one, Lexi. I'll bring that up. Business insurance. So you've got professional insurance, you've got liability insurance, you've got, if you have an office, you have insurance for that. If you have employees and you have health insurance for your employees, that's all deductions. If you travel for business, for the purpose of business, so this weekend, I'm going on a trip with Jerry and Lexi to go meet a potential vendor that we're going to use. And we booked flights, we booked hotels, we're probably going to end up having dinner. It's literally a business trip. We're not going for pleasure, but we're going for a business trip. We need to go meet this vendor and they're on the other coast. So we're flying over there. That's all deductible. And if you're on a business trip, then your food is deductible while you're gone because you went for business, right? So those are all deductions. I know there's less travel happening these days, but it is happening. Education. If you are, especially I know lawyers and CPAs do this. If you are purchasing continuing education, you're going to classes, you're buying business management education, that's all tax deductible. And that's disrelated from charitable donations, right? So let's say you are making a charitable donation to a church, that's deductible on your personal side. But let's say you're buying business management training, regardless of where it's from. Sometimes it could be from your church. Sometimes it could be from, a cruise ship in the middle of the Caribbean, but you're going there for the purpose of business management training. that is a tax deduction for your business. Okay, hiring a CPA or someone to do your taxes, hiring someone to do your books for your business is a business expense. Hiring a lawyer to help you on your contracts for your business is a business expense. Hiring a lawyer for your personal, like for a divorce or something like that, or a legal thing, a criminal case, or I don't know, any of those things, those would be personal expenses. They wouldn't have anything to do with your business. But let's say someone sued your business, God forbid, obviously we don't want that, and you have to fight that lawsuit and you hire a lawyer, that's a business expense, that's deductible. So I've just been listing off examples of business deductions, and I hope this really helps people because I get asked this question all the time. And I kind of feel like a broken record because I say the same thing over and over again. But I just want to reiterate the purpose. And the purpose of this, or the purpose and the 4 points that Jerry and I went over. So you've got to have intention. Are you planning on using this for business? At least majority business. Yes or no? Then the use. Number 2, use. Are you actually using it for business? Majority, yes or no? Validation. Is it validated by the tax code? Are you saying, no, I'm going to deduct it anyways, but if you were ever audited, the IRS would disagree? Probably shouldn't deduct it. And last one is documentation. You have to have good documentation. We've also talked about this as in the form of not piercing the corporate veil, right? So if you're a corporation and you're using your business to fund you personally and saying that it's a business expense, the IRS could also say that you pierce the corporate veil and you don't get to be classified as a corporation anymore. I personally don't know anyone that's happened to, but I wouldn't want it to happen to anyone. So again, let's just do it right the first time. Okay, so now I have said my spiel and I would love to answer any questions. And again, if you are watching this later and you're not on this Facebook Live, please feel free to email me, Maya at solvencynow.com. Hi, Nano. Hopefully you watched some of it. If you didn't, you better watch it from the beginning because you've also asked me this question. But any questions on deductions, now's the time to ask. If you're watching this later, again, Maya at solvencynow.com. Thank you, Nano. You can go to my website, solvencynow.com. I think I probably have an article in there on deductions. It doesn't have all of these things that I've just told you now, that I've poured my heart and soul out to you to tell you how to deduct as much as you possibly can, but also everything that's legal to stay on the IRS's good side, because you don't want to get audited. And if you do get audited, you want to be able to pass with flying colors. You want to be able to say, here's what all these things are business deductions, here's all my documentation, and then the IRS will say, thank you very much, have a nice day, if you did ever get audited. Okay, yeah, it's true. You would have to rewatch it, Nano. I said everything. I poured out my heart and soul on this subject because I really do get asked this at least once a day. Okay, so does anybody else have any questions that is watching? Again, if you're not watching, and also feel free to Facebook message me if you like. I will answer your questions. I'll probably ask you to email me or to set up an appointment. But again, and this is kind of something I'm going to probably harp on every week, every webinar, now is the time. Now is the time to get your bookkeeping in order. And we're getting tons of people calling us. I feel like we're the gym, it's like new year, new me, get my finances in order. You're very welcome, Sean. And right now we probably have a 2 or 3 week delay before we can even start a new person's bookkeeping because we have so much coming in. So now's the time to start. If you want to get ready, if you want to have everything ready to file your taxes by March, if you are a corporation, if you are not a corporation, by April, then now's the time to get started because CPAs want to have your books, they want to have all your documentation for at least a few weeks before they file. So I hope everyone watching this got as much as they can out of it. Please let me know if you have any other topics that you want me to talk about. I'm doing one of these webinars every week now, And I'm trying to help as many people as possible because these are all questions that I get asked a lot. So if you have a great topic that you want me to talk about, please feel free to write it in the comments or email me and we will bring up the topic. Because if you're asking, that means also everyone in America is asking as well. Okay, good. Well, I think I've said everything I have to say. Thank you all for watching. Thank you all for listening. I hope that I was able to help you all. And I'll see you next week on the bottom line. Bye.